moves and it's so better leave. I'ma swap it for time and I fake it for me. More jittery bass in 2 days, I'm on 3, I'm gone. Palomino Patron, Cappuccino Tuton, Alameda Song, stack it up, stack it up.
What's up, gang? Welcome back to the pit. Very excited to have everybody here. How's it going, RT?
Good, man. I was throwing up the hands to play like I was expecting that, but I was watching it on YouTube and it was still just the video. I was like, oh, we're live. Good to see you, man. Energy today. A lot of energy. You know why?
Let's go. Bring the energy.
Because I'm in a big short and it's so far going down.
Yeah. The big short. I think
the big short.
All of us are in it right now.
A few of us,
yeah. Speaking of all of us, what's up, Jedi?
Hey guys, it's good to be back. It's good to be back with RT as well. Even though, thank you. Even though he's going to be leaving us for a doctor's appointment with the twins, but it's still good to be here with the RT.
Have to cut early.
Yeah, it wouldn't be a pit if we weren't all over the fucking place. I am cutting in Circa too quiet is what the chat says. Let's boost him up, baby. Yeah, I got to cut in half an hour, which is now in 15 minutes, but that's okay. We're going to come in, we're going to text some shit, we're going to do some stuff. We got a special guest getting loaded in on the back end here with our producer, and he's from Tapioca DAO. So I really hope that all works out. That was kind of the reason for the delay, and we decided, you know what, fuck it, we'll do it live. So our lovely producer, Coach Popovic, Coach Vic, Coach Papa. I'm thinking of basketball, Popovich. He's loading them in. So we'll get to him when we damn well
squeeze in a market overview before
oh yeah. I had you on the full screen. Now I've got the actual shot. So here we are, trend check. It's still down on the daily. Not too exciting about longs. I will admit, being in some cash here and being short, I do acknowledge the fact that I could get left behind on a $1,000 candle from Bitcoin and a bunch of alts that look great. But I'm restraining myself. I'm exhibiting self-control.
I mean, just by default,
fighting my urges.
One should be short when we're going live.
Yeah, we do get a lot of big moves on camera, on stream, and I don't know. I caught some really sweet longs during our stream, but there is something about like that 1 to 4 p.m., like 2 to 3 p.m. Eastern
power hour.
The power hour. That's what we should call the stream. Power hour in the pit. Just like pick your side and join the stream. So here looking at the Agger, which I now do because I hang out with my friend here, Circa. I don't know how to interpret this like you do, and half the time I say shit and you're like, no, wrong. But I see, spot selling off basically like, CVD, perp CVD, like leading up here, and then spot kind of took the lead to the downside. So to me, that's more bearish than if perps were driving us down on sort of a false move down and they get squeezed up. So is that true? Is this more bearish because spot CVD is dumping harder?
So as Reformed in the pit had pointed out, like spot CVD can be misleading if you're using it sort of as a naked indicator for, is this price movement valid because of absorption. So I wanted to point that out, is that if you see spot CVD just cratering, but price isn't moving, but it's still going down, that's telling you, oh, it's absorption.
Somebody's buying the shit out of all that selling.
Exactly. Yeah. A passive bidder. So CVD, there's only sell orders, market orders, but someone's absorbing it all. So it's a good way to spot absorption. But if you're looking at the divergence between perp and spot, and price is sort of behaving like perp's mooning, price is also mooning, spot's not really doing anything, then it could indicate, like spot's actually not playing ball here, and this probably reverts.
So in this case, when you look at this 5 minute, we do have spot leading the way down, perps kind of trailing. What do you make of that?
Well, it's hard to tell on days like this. If you Marusha on Twitter, who's one of my favorite follows, the Frenchman, he's just talking about how like it seems to be just one big dumb entity on Nance.
Sorry, wait. I missed you there, Circa. What?
Marusha was just pointing out that that Nance, there's someone in the Nance order book that's just like doing the dumbest shit possible right now. And seems to be just like, there's a lot of, it's algo driven. So you can see like crap tons of very similarly priced market orders that are just like around 100K will come in all in just like a flow.
Yeah.
And okay, that's an algo. It's not a bunch of people decided to short 100K at the same time. It's an algo. And and it's been moving price up and down a lot with very little activity or participation from other entities. So he was postulating that like some idiot is playing weird games in the order book right now.
Okay. Which
So
is
hard
kind
to
of what
tell.
you'd expect in this environment. We've got a lot of chop.
Yeah.
It is an uncertainty point, right? Is it going to snap back up and this was a deviation and we're back in range and we're moving higher? Or is it like prepping for a nuke? And I when I look at this, first off, when I think about trading, there's so much I don't know, and like every time I think I figured something out, I make some money one cycle, 1 year, whatever. And then like you just realize like I have no insight into what's going on in the order books, no insight into like liquidity mapping, heat mapping. I love that shit when people share it. I follow people for that info. I'd like to learn a bit more about that, but that's one point. You never stop learning. Second of all, there is a battle going on right now, and I just feel like it's going to be annoying. It has been kind of annoying this week, but the point is like when it is won, the classic like big move incoming. So at some point, the Bears are going to give up here, and we're just going to blast up to 28s or something. Or the Bulls are going to give up here, and we're going to really fucking nuke. And I'm obviously on that side right now. If anyone's wondering why, it's because Trendmaster to guide the trend and set bias, and then you just have like this really sweet setup in the sense that we had.
Yeah.
So we break this low, we come back in to kind of retest these lows on the 4 hour. We get a nice M, we break down, and that triggers the setup. And now it's like let's hunt some shorts in the short reload zone, and it just came in overnight, like fucking gorgeous.
Yeah, you got some sweet top.
So yeah, getting short against this is like, I don't even know what's going to happen next. I never do, but this just happens to be really tight invalidation of an idea. And of course, the potential upside in that trade is something much more high time frame. Like, if we just lose this and it kind of give up on it, like we get right into this reload zone through the summer. So this is a scalp and a swing for me. I'm going to close some like pretty locally here soon, and then stop loss break even and see where we go.
I've caught every local top since except for it's basically since 31 and
flex.
But that's not a flex because I constantly give back UPNL because I'm doing the same thing. I'm like, oh, this is turned into a swing. And then it's just like, it's been so infuriating.
Yes. So that's why I am closing. I have an alert here really close, like 1801. I have one down here. Because I just don't want to go full size here, move stop to break even and just watch it all disappear.
Yeah.
I've done it many times. I've done it a lot with like longs where like Smitty and I are live trading, on a call, and we get into these like CPI wick, but and we're in that trade and then it takes it all back an hour later. And we're like, fuck, dude. Yeah. Like that was a day's work. That was a month's work.
Yep.
Capture the damn trade. So we're getting a lot more into like what Beamish talked about on the stream a couple weeks ago, which was like, give me that 2-to-1 or 3-to-1 and then move stop loss to break even and call it a day.
Yeah.
Take a look. Get a free look.
Is Matt in the stream now?
That's a no. It's a hot no. Or well, I think Vic's on mute. Jedi, you're short right now, are you not? Did I hear something about you doing a short thing?
Oh, we can't hear Jedi.
Oh, Jedi has lost sound. No.
Maybe Matt is in here, but we can't hear.
So I opened a short yesterday.
There he is. Yeah.
I opened a short yesterday evening my time, which was afternoon Eastern Standard, and it looked really heavy. And then obviously, it's obvious. Open the short and immediately it just goes straight back up again. And I'm like,
oh, like right here or something?
Yeah, so I actually moved the stop loss. And I was like, I'm going to move the stop. Yeah, exactly there. I'm going to just move it up. I'm going to ride it because I just really have a sense that we just going to have to go back down again.
So you probably like right here because that's like 2 to 3 p.m. our time. And it did look a little heavy there off the reload zone.
And then it's kind of just been really weird, right? Like the price action's like been gradually going up and then hovering, and I think we need a bit more pain. That's what I think, and that's
I think
so
someone's
too.
distributing is the best I can guess, because we just keep on making lower highs, and at those lower highs we're just getting BARTs, like constant BARTs. And it just seems like someone's spoofing price up to then like get rid of some spot exposure and then let it all sink to hell afterwards.
This is the narrative that I would like to believe as well. It fits my bias, so we'll give it a yes. This has been some weird price action today, though. Like as somebody who's now back to staring at low time frame price action for the day because I'm in this position, but like, you know, we kind of opened. Well, New York opened, you know, NYKZ up. And then just like snap down. I remember you're in the pit. You're like, "See ya," and then it was like, "Nah," right back up.
Yeah.
But then just to engulf that right away, and now to not continue and just to trickle back up, like it is a very weird zone.
I was specifically looking at when we broke
Monday
close on BTC. So we broke it and then immediately recovered back above. And so I closed my shorts out and flipped long for a second, and then took profit on that and flipped short again. But I've just been watching Monday low, open, close, high.
Yeah, so let's take a look at that Monday thing, because that is some sweet, juicy alpha that I've seen popping up more and more.
Dude.
What is that? Wednesday, Tuesday, Monday. So we get this, and then you get this, and you treat this as like a range to just play throughout the week.
Literally, like the only levels I'm using besides fair value gaps.
Yeah, no, I love this. I mean, and I love that my TP1 is just inside that. So like I obviously play with the fibs, but as we were saying before the stream, like sometimes the fibs just get front run weirdly. I'm like, okay, so what the fuck stopped it? And it's probably a lot of this kind of like weekly open, monthly open, all the shit that I don't really put in my charts. I think I'm going to start putting it on because it's just nice to have confluence, and then you have a stronger level. More traders are going to be supporting your price or whatever the fuck it is. You know, and then once you lose this, you know, you can have a bit of a setup too, saying like, hey, we're out of that range. And in this case, it retested beautifully and then dropped all the way to sort of my reload zone stuff. So yeah, definitely some alpha in these Monday open ranges for the week.
It's crazy. It gave me the trigger to long yesterday when we reclaimed Monday's low at 26,736. And then the interaction at every level up from there, like you're either getting stopped at resistance at one of those and then coming back up, or it's retesting one of them. So it's been a great way to just get involved with the price action. Even earlier today when it seemed like it was going to nuke, all it did was just go back down to test Monday close.
Yep. And hey, we're back in there. So in that realm, in that line of thinking, you know, we're probably due to at least sweep these lows one more time for anyone who's out there like trying to snipe longs. I kind of fell into my Bitcoin short. I wasn't sure. I was sitting there on the fence, as you do at the highs when you should just be trading your setups. But I actually, like right here, I was kind of like, oh, I'm just going to take it against this high. And then as I was setting up the order, it just went wee, and I was like, fuck, this is it. And I just like marketed, you know, right into it. I think I ended up, you know, where did I end up? But like somewhere up around here. So it's a, you know, now it looks fucking sweet. Basically stop at break even here. But yeah, we'll see how it works out. I don't get confident in these kinds of setups until they really break. And then I always lack confidence in my shorts. Longs in a bull market, I'm just like, yeah, this is what you do. Feels like in my comfort zone. But this is just, you know, you get paid to be uncomfortable sometimes as a trader. Risk is pretty tight in small, so it's not that big a deal. It's more like I'm anxious and watching it because I really like, I'm excited, like I want it to hit, because it's one of those ones where you get in on a scalp setup, but it could swing midterm.
One thing that's got me more comfortable with shorting over the last 2 years is 1M screen time definitely gets you more comfortable with shorting, but also learning about fair value gaps, which is an ICT trader concept, which is like, okay, if you have a candle and the two neighboring candles leave a gap, so like, you know, there's maybe a wick here that's covering some of it, but there's a gap to the next wick. then that what you see there is a fair value gap, and the reason they're used is because they just don't exist. If you go through any chart on any time frame, you're very unlikely to find a fair value gap which wasn't later at least tested. So just that their improbability makes it such that like you can use them as targets or open off of them. And so it just kind of gets you comfortable with the fact that like even in a super crazy bull, you know, it is true that price revisits these gaps like quite often.
Is that something similar? When you say that, I just picture like a session VPVR. So in this
low
case,
volume node is a similar concept, or a thin auction in market auction theory. So it's
okay.
Fractals of concepts across all styles of trading. But
yeah. So like this is the daily. So right, the daily opens last night, and then this VPVR is going to suss out and measure all the volume traded on this day. So like as a day trader's tool. So this was yesterday's range and all that stuff. So that's what I think of when you say that. And I used to trade off these. These are pretty sweet. Like I guess on the 30-minute we used to trade them. I used to have like a Hogue day trade setup. It was one from Brian Beamish. I kind of factored it for myself. Didn't actually end up working very much. Like it smacked for like a week. I was like, I found gold. And then it just sucked. But it was basically the idea of like, if you leave value, which is the brighter portion of this, right? This is like the faded fringe. Yeah. And if you leave it and then you close a 30-minute back inside, then there was like a really high chance that you're going to cross over to the other side. You're going to
rotate to the other end of value. Yeah.
And it happened twice actually today, kind of like getting up to that and then back down to the other side. So
similar concept. Take out your box tool, right? And go to the candle off of the Monday open when we were going up.
Okay.
And so anchor one part. No, the lower.
This, down here.
Yeah. So take that candle and then just anchor your box on the wicks of the neighboring candles, such that the box should only cross where that candle was naked. If that makes sense.
Say that first part again. I was just cleaning things up here.
Yeah. So the green candle right after it, the bottom wick of it, set the top of your box to that bottom wick.
Yeah.
Okay. And then set the bottom of the box to the top of the wick on the left. There you go. So that's a fair value gap. And what do we just do? We just filled it. We tested it.
We came into it. Yeah. We haven't quite filled it yet, but I sure hope we do. Cause turns out my
will mark out
at the bottom.
15-minute, 1 hour, 4 hour fair value gaps across the whole chart. Reason being is that they're just highly improbable to ever exist. So if you have a fair value gap, chances are price is going to revisit that in short order.
Do you mean ever exist as in they happen all the time, but they fill all the time so they don't remain in existence?
Yeah, exactly. You could go back through the previous week and just mark out all the fair value gaps. Chances are all of them filled.
Dude, I like that. I want to learn more about this with you. I feel like as I have a minute left and my lady gave me the look, she's like, don't forget. I was like, honey, I wouldn't forget. I'm not going to stay too long on the stream. So I can't now because I've double promised, but I want to get, we got Matt from Tapioca in here. We've got Jedi here, obviously want to hear from. I do have to cut and I feel bad about that. I'm having a good time.
Before you leave, what's really worthwhile checking out from this aspect of trading is that Ryan, aka Cantrin Clark, they actually developed a course called I think it's called Block Roots. It's actually insane, dude, and it's free.
So good.
He put it out there. It's in. Just go to blockroots.com. Just
is that kind of like order block type stuff? Like
yes, dude, everything. It's just
I've always been curious about those. Also, that's not a TRI concept, so I didn't get it. I'd love to, man. So for real though, Circa, you and me, we're going to sit down, have a coffee, and talk fair value gaps because I don't know what the fuck is the exact reason you spotted this one, but I love that concept. And as part of my new trade plan, which is going to be a lot of high time frame boring stuff, I do want to have like a nice little scalp account, little challenge account, just to keep the old, keep the old grease flowing. So
keep them sharp.
Keep them sharp. Okay, boys, it feels weirdly short today. It was like 6 minutes, but I love you guys. And I'll catch you on the next one. I'm gonna go see my babies.
Peace out, sir.
Take care.
But
let me I'm screen sharing now, Coach Popovic. So
For
Jedi.
random task is now also known as Matt from Tapioca. It seems from the
Yeah. How did that happen?
so just for the viewers and listeners, Matt's actually had an issue with his phone because he's not normal. He doesn't use a computer for some reason. Now I think he's actually traveling, and he's going to be home, I think, in 15 minutes. So then he'll come on when he's at his computer. So that's why he hasn't been on. But we are trying to get him on, guys.
We're
we're
working
not
on it.
ghosting you. Yeah.
Well, yeah, dude. It's funny because I watched your interview with Cantor and Clark, and then yesterday I had a trade idea in the morning that was in direct opposition to like a big TWAP short and I was just like, oh God, I'm fading Ryan right now. Like it
Yeah.
definitely made me
Yeah.
scared. But then sure enough, he flipped long. So I was, I was happy to
I
see it.
saw that post actually. I saw he didn't like what was happening on the order books. I'm closing it out.
Yeah, yeah.
And I'm like, oh shit, he's closing it out. And I've just gone in and I'm like, no,
Yeah.
And I was like, okay, well, I know that he likes to keep it really tight. He likes to catch a move and then obviously close, and like all good traders do. And I was like, okay, well, I still think this thing's going to go down. I'm just going to raise the stops, and if I have to add to it, then I'll add to it and compound it, which I actually ended up doing I did a small addition to it.
Nice.
So I could see it, yeah. And that's the secret to shorts, right? Because I mean, I'm still figuring it out. I'm just kind of like using what the more experienced guys have talked about, and it's worked for me a couple of times. And that is that what naturally happens is, so how do you trade effectively? You always do kind of like the opposite of what you think you should be doing initially. So when you're in a short and it starts going up, you want it to end, right? It's kind of like, oh my God, I want to get out of this. It's like, but that's the wrong way to look at it. You've got to, first of all, you got to start with your plan, as as the rational investor Brian Beamish teaches us, is what's your plan? Why are you doing what it is that you're doing? What actually invalidates what it is that you're doing? If you're not seeing an invalidation, then stick it out. We can hear Matt. Is that Matt?
Do we get him?
He's here. Yeah.
He's here. We did it.
Yeah, dude, you did it.
Oh, okay.
Okay.
Yeah, so this is what compounding looks like to me, Jedi, is that if I see like, oh, we bounced off a Monday close, so I'll take a long here, and then I'm kind of delta neutral at that point, and I'll close the long. If I still believe in the short, I'll just close the long once it's, where I want it to be. And now I've added all of that P&L to the short. So like, but compounding can also be close the short or partial close and reopen once you feel like the long's done.
Yeah.
We got Matt from Tapioca DAO. What's up, Matt?
Yo, what's up? Yeah, no, I'm literally I'm so dedicated. I'm driving. I was downloading this on my phone. But we made it. I'm here. And I guess that's what counts. But nice to meet all you guys. Nice to be on the stream.
It is very good to have you, sir. I've pulled up the Tapioca website right now. Crazy splash animation going on here.
The best website in DeFi, ladies.
Right? So good, dude. I'm very excited because I was
winning.
Okay.
Oh, am I delayed a little bit? I was just saying, award-winning website.
Did it win an award?
Yeah, we put a lot of work in.
Did it really win an award? What award did you guys win?
CSS Design Award for most innovative site. It won Site of the Day, Site of the Month with them too, and then it won an Eye Afternoon Award.
So yeah, your UI UX dude went off.
So lit, dude.
Yeah.
Yeah. No, John Crab.
Well, shout outs to him. I've been bullish layer 0 since 2021, And when Jedi finally told me that Tapioca was a layer 0 implementation, my eyebrows perked up. And so I'd love to know straight from the horse's mouth a little bit about what Tapioca DAO is, what you guys are seeking to achieve, what your sort of new capabilities you're bringing to DeFi.
Yeah, no, yeah, it's a kind of layered thing, but I would say basically the elevator pitch, 3,000 foot view would be, kind of opening up, this day and age we have, I think last I checked was 151 chains. Average users using 3, 4, 5 chains. Like I know you guys are on Solana with Hxro, and a lot of people are on Ethereum, a lot of people are on Arbitrum. So, we live in a multi-chain world. There's just not a lot of ways to kind of live in it. It's kind of a dreadful living experience, kind of, moving to chain. So what Tapioca is kind of about is, DeFi, base, kind of reason for it, for users to adopt it is yield. The best way to gain yields is markets. So basically, opening up that yield layer, OmniChain to dozens and dozens and dozens of chains, which is kind of the central kind of thesis of it. Beyond that, kind of one of the secondary things is DeFi protocols probable again, which has gone under a few different names like yield and stuff like that. I think it just comes down to having an actual business model that isn't copy paste compound and pool two stuff for years and years that never works, never did work. So we have cool stuff that we're doing on the tokenomics side of thing, and kind of where we want to bring the protocol on the token economy side of things. But I think the center of the show is USDO, which basically is OmniChain USD. It definitely is. It's another CDP stable, over collateralized stable, non-algo. But it's a lot more than that. Not only is it an OmniChain stable that can be teleported chain to chain to chain, but also it's built to be censorship resistant, and a true decentralized stable in that there's no USDC backing, no Tether backing. So, you have kind of like the golden era of DAI, brought up to a 2023 kind of mindset, where there's a big gap in the market for, a true decentralized stablecoin and not like a USDC wrapper, which is all we have, and that I think are pretty much pointless. So I think that's kind of the summary of Tapioca and what it all encompasses.
That rocks, dude. Yeah. So for the viewers out there who kind of might have missed a few of the things that Matt was touching on, number one, we have CDP. That's a collateralized debt position backed stablecoin, meaning it's backed entirely by loans against assets. And these are very resilient stable coins because they're backed by actual assets, and there's a liquidation engine that makes it such that they're never really losing that backing value. Started off with make or die, but then at some point Maker decided to use USDC to sort of make DAI more stable, which it ultimately opened it up to the risk vectors of USDC or USDT going under. And MIM is a similar thing, CDP stable, but it's got its own issues, but typically a very resilient stable coin, CDP backed, and to have one that's multi-chain is a whole new era. So that's super cool.
Matt, wasn't
what I would touch on, I'm sorry, Jedi. I was just gonna say what I was gonna touch on real quick is kind of like where I think Maker kind of lost the plot was, like backing DAI with DAI. Like they literally back DAI with DAI LP, so you're backing DAI with DAI. The USDC backing ballooning to be 40, 50, 60% of the backing. MIM is kind of the opposite spectrum, where it's basically a high risk money market fund that's dollar denominated, where they're putting the riskiest collaterals you can possibly get so that degens can get leverage, which there's definitely a place for. But basically what we did was we said, gas tokens have inherent demand due to their underlying block space. So they're the safest types of collateral. They usually bring on-chain liquidity. And essentially, we have Hxro Labs that's risk auditing all of this and risk managing it. And essentially with just gas tokens and liquid staking derivatives, you can still create a very stable coin. And kind of my thesis is like algos just don't work. They work in up only markets, but
Yeah.
as soon as the market's not up only, they crash and burn. And I don't care how you twist an algo. Like I always see people, oh, I'm
Oh, did we
Did we
lose
lose
Matt?
him? We lost him. I wanted to actually ask him. I'm sure he'll be back. I wanted to actually ask him the question: to what extent did Mim and Abra and that whole kind of phase of development around Mim actually influence the development of Tapioca DAO?
Yeah, that's a good question, because definitely pointed out those misgivings with Maker.
Yeah.
By the way, hope your short's doing well, Jedi. He pointed out those issues with Maker, but obviously on the other side of that, you got high risk. I mean, definitely, it's amazing that Mim didn't really depeg that bad when it came to being like. I think they were very exposed to UST and then very exposed to FTT. So tokens ending in T were ultimately very bad for that protocol. So yeah, it's interesting. I've always been a fan of Mim just because of how degenerate it is, while still having been very stable. Like they kind of thumbed their nose at the establishment, and they didn't get really pegged for it, or depegged for it. So
I think what's really interesting about Tapioca, I mean, we've obviously been working with, I think he's back. Are you back, Matt?
we got Matt.
He obviously didn't pay his cell phone bill, clearly.
Yeah.
Matt, go ahead. Go ahead, Matt. Yes.
Yeah. Yeah.
the Gemini USD, they have like 300 million. And
Yeah.
I think it just ballooned into such a large risk, kind of. It's definitely changed from what it was supposed to be in 2019, when it was just ETH minting a stable coin. It was an ETH backed stable coin. And even though ETH fell 70%, DAI kept its peg throughout 17 to 19. And basically, USDO is just meant to be that, like a stable coin that's truly decentralized, that users can trust that it's going to hold a dollar peg with great quality assets that are also decentralized. So, yeah.
Well, that rocks. Yeah. So what, I imagine the spice on the rice, so to speak, with this is that it is omni-chain, and it is leveraging technology that makes omni-chain more than just, having to actually bridge your assets and provide liquidity all throughout that bridging experience. But sort of what else is sort of unique about this protocol, as opposed to, any other CDP, sort of, money market?
No, great question. I think where it comes down to is where I was kind of touching on the token economy. So basically the goal of Tapioca is to build the biggest treasury ever built in a DAO model, and basically exploit that liquidity that's captured by this DAO to not only settle what's in the ecosystem, as far as like USDO and TAP LP cross chain, but also to basically start gaining yields on that protocol owned liquidity, and actually, like I was saying, create a profitable business model where you have a DAO that's earning profits on its protocol owned liquidity, which is made up of different segments and LP and things like that. And
Oh no.
No,
They
like, that
don't
was
want.
the
They don't want
that
him
was
to
that
drop
was
the
the
alpha.
best. So I mean, this is the thing about like this whole thing that blows my mind about Tapioca is that they haven't like come up with an idea and said, okay, well, we're going to do like one aspect of this thing and then we'll figure it out as we go along.
Yeah.
Like, dude, we've worked with a lot of protocols in DeFi over the last 2 years, like a lot.
Yeah.
And I've never seen like a plan and a mapped out strategy like this. I mean, obviously things are going to change. Obviously they're going to land up making mistakes. There's no foolproof method, but when you listen to like the plan that's in place, it just does my head in every single time, dude. I've listened to pretty much all their tap talks on Discord. I've listened to so much of this stuff and read so much. And every time I'm just like, fuck, if they pull off even 50% of what it is that they're planning to do, it's going to be phenomenal. You know, it's like, so yeah, I think this is one of the most interesting protocols that we've seen. And I think DeFi will see as well. When people start realizing and the pennies start dropping, it's going to be like, fuck, these guys are really ambitious. You know?
Yeah,
Like,
I mean,
really.
you know, the I know it's sort of like a techno babble, like nerdy thing to harp on, but just the how layer 0 works and you know, I know that they're using that to power their omni-chain features. It's really cool. Like, it's really not something we've seen before. People are used to bridges. People assume Stargate is just like Synapse. I think they don't really comprehend the underlying tech that makes it so much more powerful.
Well, I mean, you've got copy and paste like protocol at the moment, Radiant, which is attempting to do parts of what Tapioca DAO are have already done on testnet. I mean, they're using aspects of layer 0 to do the same thing, but the secret in the source here and the spice on the rice, as you so eloquently put it earlier on, is that how do you capture the liquidity on your own accord through users as opposed to one or two big wallets coming in? So you're getting 1,000 users coming in and providing you the liquidity to start, and then the short is printing. It's a beautiful thing to see.
It's so hard, dude. We're multitasking right now, brother.
Yeah, totally. So I think that's where the real value lies. Is not one or two big wallets coming in. It's about having a lot of users across many chains where that liquidity then gets it almost gets corralled in one place, you know, but it's not in one place.
It's not fractionalized across all these chains, which was, you know, one of the problems with Abracadabra is that, like, I love being able to collateralize my Try Crypto on ETH mainnet unless we're in a full bull, and just to leverage up is like a $600 transaction. If I could do that from Arbitrum, or, you know, like, they didn't have the same asset pools across all chains. So you were forced to, if you're on Arbitrum, they had like ETH and then like one other. But on mainnet, they've got like 20 different asset pools that you can collateralize against. So it would be very cool to get back into sort of full bull territory and have that kind of capability. It's going to unlock, especially for those who know what they're doing with these types of protocols and use them as the tools they are. You know, it provides a lot of optionality.
So, I mean, just for the listeners and also viewers at the moment, what Tapioca DAO does in idiot terms, namely for myself, is that you're essentially able to lend and borrow across however many chains the protocol decides to be present on. And I think at the moment they are on AVAX, FTM, Arbitrum. So they're going to be based on Arbitrum, obviously Ethereum. Matt's a big Ethereum fan. I won't call him a maxi because obviously he's multi-chain, but he loves ETH. He loves what ETH has to offer from a collateral perspective and obviously from a network effect perspective. So imagine being on FTM and you want to borrow on Arbitrum. You can do that.
Yeah.
Without moving. Yeah, you don't have to move your funds. You can just do it off the platform, and you can basically message your funds across, do what you want to do with them, and just essentially be anywhere you want without having to bridge and do all that.
And you can take, I'm sure it's a component of like, well, I've got my assets collateralized on Arbitrum. but I'm on Phantom and I want to purchase a Phantom asset and I need Phantom stables. To be able to do that without, going to Arbitrum, taking it there, bridging it across, like, it's just like that. It'd be so sick.
Yeah, it's going to be sick. Let's see if he does come back, but I think that was kind of like the idiot's guide to what Tapioca is planning to do.
I'm super
what's going to be what's going to be really interesting about what's happening at the moment is whether it actually bounces before the 26,300 at say 26.5 on that line there where you are, or whether it's going to go all the way down.
Okay, cool. Yeah, I don't know. This is a big old FVG from this wick right here.
Yeah.
And I'm expecting it to get filled. I mean, obviously at some point, but maybe we get to bounce here. I mean, it lost the Monday low. That's significant.
Yeah. So just walk us through what's going on here at the moment in terms of the different lines that you've got. I know that those yellow bars going down are liquidations. Is that correct?
Oh, yeah, on Agar. Yeah, so these are all long liquidations.
Yeah.
The pink ones here are short liquidations.
Okay.
And then this is cumulative volume delta. This is, the difference between orders over time. So if the line's going up, it means there's more buy than sell orders. If the line's going down, it means there's more sell than buy orders. But those are all market, not limit. So, the fact, so let's say that, for instance, here, you saw spot CBD is cratering. It means that there's just shitloads of spot sell orders. But we stopped, this down candle doesn't really indicate what this is doing. And that shows you absorption. It's when there's some kind of passive buyer here who's limit ordering and absorbing all of the sell orders. Obviously that guy got wrecked, but
yeah, obviously,
yeah. And then this is actually CBD on different exchanges. So you can see Coinbase is like bidding here, and yeah.
I don't think it's going to bounce, dude. I think it's going to keep going down.
Yeah. I've left some of my order open, so let's go.
But the range at the moment is if you aren't like leveraged to the tits, or if you have got a big bankroll that you can, even if you are caught on the wrong side of it, you can keep it open, without getting too wrecked. I mean, the range is pretty slim, it's not like fucking carnage. I mean, sure, you could get $1,000 swing here. It could happen, but I don't know. It seems like it's very much set in this range.
Definitely comfier having an underwater short after having lost the range, and now we're sort of retesting some levels from it. Yeah, definitely a lot comfier. Having a liquidation level at like 29K is definitely not like something I would be sweating. So
which is pretty much what mine is at the moment. So you've read my position.
Yeah.
Spot on. So,
yeah. I don't think it's gonna rocket up there without me being able to take action.
Yeah, totally.
Dude, render barely moved this whole time.
Is it still strong? I mean, let's chat about this, because we chatted about it on our stream early on today. Grant was, kind of like speaking around the narrative of how Nvidia's been doing, and he believes that render's kind of riding this whole graphics card narrative upswing. What are your thoughts around that?
I think it's the dumbest fucking thing I've ever heard of. It's the dumbest shit I've ever heard of. Like, who's gonna rent? But I understand it's for like, the application is not for me gaming at my home. I'm gonna buy render tokens so I can have more GPU. It's for like whole applications. But even that seems dumb, because like, why do I need a blockchain to rent GPU power when there's just so many other infrastructure options available to me? Like, why would I do that? So I don't know. It just seems dumb. It just seems like this is my first time going into a bull where I'm not as sort of foolish or blind. And it's very hard for me to see it as anything other than stupid, but it caught such an insane bid off the lows that like, it's stupid enough to be an outperformer for the whole next cycle. But the whole time I'll be thinking, and I'm glad that I'll like, if I buy a big bag at like $1 or whatever, that I know secretly that this is dumb.
So this is exactly what it is that we were talking about earlier on today when we recorded for tomorrow's broadcast, is that how stupid is this? But you know what? It's actually valid because of what the NVIDIA chart is doing and because of what this chart is doing. And this is a narrative that will continue to fly and carry on. And the next question is, so are you honestly hoping this thing goes to like $1.50 so that you can grab a smashing bag and then just hold it through the next bull? Is that what you're thinking?
It goes down to 50 cents, to be honest.
You reckon, dude?
yeah. I think it's going to go lower than $1. Because that's where it started out this run at. But yeah, it is that thing of like, once you sort of wake up to the idea that a lot of these things that caught a bid because of some corollary narrative outside of crypto, and now there's a blockchain for it, so surely it's you're going to need a blockchain for this thing. Like, even when you start to realize how that's silly and kind of not, it's not true, you still have to be willing to say, oh, but it's got this correlation to this other strong thing. And it doesn't matter that it's never going to be useful to anyone because, the mania is coming back. So you got to kind of like psyops yourself. It's really a place of thinking like, what will normies think is really bullish? And it's probably this, unfortunately, even though to me, it's like, I mean, they have an app on the App Store and fucking people call it an Apple integration.
Wow,
what,
that's
dude?
insane.
It's not integrated with Apple. They've got an app past the App Store, but that's all that you need in a bull. That's all you need. And people are like, it's Apple's favorite blockchain. So yeah, I don't know. I know there's a lot of really smart people who are bullish on Render, and there's probably things that I don't know about it or am missing. I've done a fair amount of reading on it, and I just couldn't figure out why it's not stupid. But lots of things are stupid in crypto. We had Pepe go to 1 billion or whatever.
Dude, it went to 1.7 billion.
Jesus Christ.
That was the top. It was 1.7 bill. I was sitting in front of my computer and I was watching this thing. Obviously, I faded it. I mean, we actually wrote about it in the newsletter. Dan wrote about it in the newsletter at 500K market cap. It's there. It's in black and white. We wrote about it. And did we do anything? No. Because we're a bunch of donkeys. We didn't do anything.
Yeah. I mean, I definitely mismanaged shorting it. Like I took profit too early.
Oh, did you? Okay. That's what always happens, dude. Render's taking a bit of a beating now, it seems. We kind of jinxed it, I think. Yeah,
I hope so. Because I do have a little cheeky position on Render right now. But it's strong, dude. It's super strong.
It is. It bounces harder and faster than anything else. Any opportunity.
Real. It's nuts.
So, I mean, just go to the ETH chart quickly onto the hourly, and I want you to just check. ETH just broke a certain level that I think is quite significant.
Yeah, I'll say.
Yeah. So, okay. So just go to the ETH chart quickly. You're there now. Sorry, I can't see it. Okay. So if you look at... Yeah, you've also got it drawn in. I mean, that is a massive, massive level.
You know what that is? That's Monday's low.
Monday's low. But then look at all that. Look at all those points along that line to the left. I mean,
yeah.
Sure. This. I've been waiting for this. I think this is a very significant move for ETH. I think we're.
Yeah. I mean, basically broke out of like long time value. And then came back in to act like it was deviating and now is back outside of it. Now, one thing that Cred always talks about is like here, you got a deviation. It went below this important level of the range and it went back inside. Usually really safe to bid. But if it goes back outside of that, almost never deviates twice. So the safest trades are usually when you get a second deviation after a fake out. After a deviation, it's like it's not going back. But maybe it does, who knows. But yeah, Cred has said that those are some of his favorite trades, some of the only trades he takes.
This is one of those.
What's up, Matt?
Matt's back.
Yo, I actually can you hear me? Am I good?
Perfectly.
Yeah,
you're good, dude.
I'm really sorry, guys. I think it's this damn app was rugging me actually, because I checked, I had good signal, but nonetheless, I am on the TW Mat office PC, so we're all good.
Nice. We did it. No more ruggings.
No, we're not down bad no more.
Yeah.
So yeah, no, I'm here. Yeah, I see some teleporting going on.
Yeah,
Matt, I wanted to ask a question the first time you disconnected. So I really, it's a question that I've never actually asked you, and I know that it's something that we've spoken about, and you've spoken about, and Ben's spoken about countless occasions. I mean, it's come up. I mean, it came up. Abracadabra's come up. Mim's come up, and I wanted to just check in with you. Like, what were the things that inspired you about Abracadabra that you guys essentially took on as things that you wanted to do and no doubt do better?
No, that's a really good question. That's actually a really, really good question. I haven't been asked that seriously. No, so I got a lot of respect for Abracadabra. It's just, first off, it's just a different business model. Like, Abracadabra is about high risk, high reward. It's not really meant to be like stablecoin that you hold to, retain, your value in dollars. It's more about accessing leverage on high risk assets and gaining huge yields on it, which is certainly a very attractive business model in DeFi, but it's just not the business model that we have. But what attracted me to it was I've always thought long tail assets, regardless of if they're risky or not, need to be supported. And I think money markets, unified money markets, are generally a bad idea. You need to be extremely smart as far as risk management, and you need to be very smart. And what happens is you had Venus, Rari, all these different guys that ran Compound or Aave forks. They inevitably add a risky asset. Agora on Metis, I could go on and on, but they had a risky asset and they blow it up. And I just think it's better to have isolated markets. It's more secure for the user. You can lend within that market, blah, blah, blah. You're not taking on the risk of all the other assets. It opens a whole new world that you can support LP assets and all types of stuff. And I've always just thought boring crypto always had the best mindset, the best kind of developed implementation of how a money market should be developed, with Cashy and the interest rate model on it and everything like that. And you see Aave and Compound going to isolation modes and stuff like that now.
Yeah.
And to think he did that back in 2020, is pretty crazy how far ahead he was. But basically, I thought Abracadabra was extremely, extremely innovative. And I think if they kept it as Yearn assets, if you remember at first, it was supposed to be minting a stable against Yearn's assets, which is awesome because Yearn's assets are yield bearing. They're generally pretty good quality assets, collateral assets with limited liability. And minting a stable against them is huge capital efficiency, leverage up, you have great yields, blah, blah, blah. Everyone's happy. And then they started going into let's add SHIB and let's add FTT and
Wonderland.
Rat Memo, stuff like that. And that's where I started going, like, I'm out, peace. This ecosystem is not going to work. And secondarily, I never bought into the curve convex bribing model. I always thought,
whoa, you're not a curve bro?
No, not at all. Zero.
We're gonna come to blows, sir.
I'm a Uni V3 maxi. I think concentrated liquidity is the best in most efficient swap mechanism ever done. I think basically the fact that 80% of swap volume happens on Uni V3. I just think Uni V3 is well ahead of Curve. Not to say I don't like Curve. But I also think the cost of getting involved with Curve as far as having to accumulate VECRV, whereas with Uni V3, it's just all the LPs make all the profits off the asset. So I think it's just a superior model, and you have things like Arrakis and Gamma strategies and other stuff that are building on top of Uni V3. So for right now, I think basically in my head,
you know, going for the bribes, and then liquidity mining the hell out of, you know, your LP assets, like, you know, MIM, USDC, MIM ETH, or whatever. I think it just ends up that you have a down only token. And even in an up like even in a euphoric bull run, you know, Spell wasn't really, you know, climbing rapidly other than with Luna. But I mean, it's just, you know, on the token economy side, that's where we basically said, like, look, we're not gonna, you know, copy paste this stuff anymore. We're gonna scrap all of it and kind of build our own thing. And, you know, we looked at bonding for a little bit and went, but, you know, we ended up on the call option stuff and everything. But to go back to your original question, big inspiration behind Tapioca is just boring crypto, period. It was a pleasure building Bento Box V2 with him, and auditing it with him and everything. And yeah.
That rocks. One of the big sales for me in the last bull was for Abracadabra was really what I saw it as was the ability to collateralize yield bearing positions.
Yep.
And that was super attractive, right? Because it's like, okay, I want to be getting yield and I want to be in safe base assets. And having Curves Try Crypto too on Abra was like a dream, you know. Is there any plans with Tapioca to have yield bearing positions as collateral?
Yeah, that's what. So we have Big Bang where we mint USDO with gas tokens and liquid staking derivatives. So it's basically the same thing as Abracadabra, but you know, it with gas tokens and liquid staking derivatives. Then we have Singularity, which is a lend borrow market for USDO, where it is all risky yield bearing assets, and not even necessarily risky, but maybe centralized assets involved and stuff like that. So Try Crypto is in there. GLP is in there. So basically you can mint, you know, USDO with safe collateral assets, even yield bearing stuff like with liquid staking derivatives, and then you can lend it to people who want to access leverage with it and get real yields on it, and also get OTAP off it as an incentive if you escrow your USDO for a period of time.
That's fire.
Yeah, now I'd say probably the biggest, and this would be a weird thing to say probably for people to hear this from me, but the biggest inspiration actually behind Tapioca was Sam Kazemian with the Trinity idea, where he basically says a stable coin, lend borrow market, and a swap is like the Trinity of, like, you know, the perfect ecosystem. And basically we have 2/3 of that with Singularity as a lend borrow market, Big Bang and USDO as the stablecoin side of things. And then, you know, maybe have plans to do a swap, maybe not, who knows? But but yeah, that's kind of the you know, that's kind of the central thesis behind it is, you know, if you make a stable coin, you need to have the ability to get a yield on it, or it's worthless. Like it's like people, what, you're going to swap it back to USDC and, you know, waste time with it. So basically, I mean, you could maybe with USDO use it for teleporting and bridging between chains, essentially. But, you know, Singularity is there that you have an immediate use case to gain yield on it. So
that rocks. Yeah. You know, on Abra back in the day, they had a partnership with Convex where they'd take your Curve LP tokens, stake them on Convex on your behalf, and then pass along that additional yield to you. Is there any types of second order, you know, yield possibilities with those kinds of assets?
Absolutely. Yeah. I mean, we have stuff like TETH that's going to be in Singularity, where it's omni-chain yield. Basically, it'll move ETH between multiple layers, so Optimism, Arbitrum, and Ethereum mainnet, and it'll deposit it into whatever the best yield strategy is within a certain risk tolerance. So if, like, I mean, at launch it'll be low risk, but you get yields from Balancer on you know, Ethereum mainnet, or Curve on Optimism, or whatever, you know, whatever's basically within that risk tolerance, that's giving the best yields. And then also on the side of kind of like where you have like a two-step type thing like that, there's some really neat yield strategies that we have, like with Stargate ETH, for example, where we take the Stargate ETH, we LP it, and then when you lever it up, you loop that basically that you know, that operation set. And that actually can get really high yields because of the Stargate liquidity mining program. Like with 5x leverage, you can get around like 80% on USDC or ETH. But I'm trying to keep that one a little bit quiet because other protocols will start
leaking some alpha for us here. Yeah, man.
Yes, sir. Yes, sir.
Love it. We were talking when you cut out the first time about how you know, one of the biggest pains in the last bull, and probably why Rari had a real tough time taking off in like the latter half of 2021, is that gas costs on mainnet just got so high that like even a reasonably wealthy person wouldn't use Rari because they're paying $1,000 just to open their position. And I was talking about how, like, man, a big pain of Abra back in the day was that you don't have the same ability to, you know, do your operations with your base asset on the chain that's going to give you the best costs. But if I could, you know, from Arbitrum, for instance, without leaving Arbitrum, you know, stake my mainnet try crypto or even Arbitrum try crypto, and then borrow against it without having to bridge those assets back over, like, that would be clutch. Is that kind of like the mechanism at play here? Can I have a position on one chain and then borrow from it on another chain?
So that's kind of one of the cool things is like with like TETH, take for example, it's ETH. You can actually deposit the ETH from Arbitrum, Optimism, or Ethereum, and then the position is actually on Arbitrum, and you could totally, but you could totally X out Arbitrum in that operation, which is what makes Tapioca kind of chain agnostic, meaning you could borrow against ETH on Ethereum mainnet and then borrow the USDO to Ethereum. So you as an end user, you don't even have anything to do with Arbitrum in that order of operations. However, it's actually all executing on Arbitrum. So it's depositing ETH, then it's putting it into TETH as a receipt token on Arbitrum, and then it's minting USDO and teleporting it to Ethereum. So you don't even know all those operations occurred, but you end up with, like you just did, a normal borrow on Ethereum. And that's something that we're looking to do more and more with, as far as like Stargate ETH, that you can do Stargate ETH from any chain, some LP assets as well. So I think that's one of the big things, is making DeFi protocols more chain agnostic, that it's not like if you use BenKey to borrow against staked AVAX versus Tapioca, you can't even tell the difference. And that's something that we really want to build towards, the whole protocol being just like it. You don't even know what chain you're using, just what asset you're working with.
Wait. So are you saying that in the example you just went over, I have ETH on mainnet, I want it to end up in a yield bearing position, and really, you know, it's going to take it, bring it over to Arbitrum, put it into that TETH strategy, you know, stake it or collateralize it for me, and then port my USDO back to Ethereum, and I'm really only paying the gas costs of the mainnet send.
Yes, exactly.
Yes.
So you only
insane.
pay gas on ETH mainnet, and you are paying Arbitrum gas as well, but that's the beauty of it.
Negligible,
Arbitrum,
right?
yeah, it's a penny, so it's like, what, who cares? So that's why we chose Arbitrum as the host network. Like, basically, Tapioca actually only has contracts on Arbitrum. There's no contracts on the other chains. There's just a proxy contract which sends and receives messages to Arbitrum. So that's how it allows us to scale chains out so rapidly. Like in Aave, for example, they have to do a deployment to a new chain. They have to look at different security assumptions, even trust assumptions on the new chain. If there's architectural issues with deploying on that chain, and differences that need to be made in the code base. Whereas with us, it's drop a mailbox on the chain and see you later. You're ready to go.
That's amazing, dude. That's so cool.
Yeah.
And definitely going to be, I don't know why you would use any other money market in the upcoming cycle when things get really hot and gas prices go insane.
I'll say the one, like, I can criticize my own app. The one con to Tapioca is the times. So if you do that
Right.
operation we were just talking about with Ethereum, where you have some, let's say some ETH on Ethereum, you're collateralizing it and then borrowing it back to Ethereum, your transaction is probably going to take about 5 minutes overall. And I don't think that's terrible for Ethereum mainnet, but I do think, when you can use Aave on Ethereum and, maybe 30 seconds to a minute, it does have a little bit higher of a cost in time to a user. But that's something that we're working with, building our own relayer on layer 0 and things like that to greatly speed up so that we can get closer to just L1 block time versus, L1 block time plus, nodes relaying messages and blah, 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 so,
Right.
but that would be the only con is the times. And, especially when you're going between like a performant L1 and like Tapioca, as far as like if you're on like AVAX, those transactions are 20 seconds
Right.
tops. Like if you're on Optimism, they're like 20 seconds. And I think post proto dank sharding on Ethereum, that's going to get a lot better too on L1. So
Yeah. And I mean, we just got a taste of what it's going to be like with the Pepe mania and what happened with mainnet gas.
Yep.
But, 5 minutes versus $1,000 is going to seem like an easy trade-off.
Well,
Yeah,
that's my thing too. And really where I see things going is more and more users are going to go to layer 2. I don't think that necessarily means just Arbitrum. I think, ZKs are going to become production ready in the next probably year to 2 years, and you'll see actual adoption on ZKs. You'll see more optimistic roll-ups, like, Mantle Network's one that's coming out. And we're going to start seeing users start getting fragmented between these layer 2s. And that's where Tapioca gets really powerful.
Right.
Is, like if you ever use the L2 to L1 bridge, it's like a week to get your liquidity off. Screw 5 minutes. Talking, so I mean, and being able to perform all these transactions, what you got to really keep in mind is Tapioca is more akin to using Aave and the bridge instead of just, Tapioca versus Aave. Because, if you just use Aave to do a borrow, then you'd have to go to Stargate or whatever bridge you like and then transfer and then, maybe loop the borrows and all that type of stuff. And whereas Tapioca is going to do it all for you in a single transaction, which is huge. And in that, minute to 5 minute time frame.
Now, just to wrap my head around this, building a Rari position during full bull not only is just gas intensive because of the congestion on the network, but also gas intensive because of the contract calls.
Yeah.
Very complex, and they require a lot of gas, even if gas was very low. What's the relative, like, let's say I'm on Arbitrum, right? And I have, my Tapioca position, but let's say for argument's sake, it's like managed on ETH mainnet, right?
Yeah.
What is the complexity of the contract call for a message versus actually doing all that on chain? You know what I mean? Like, is the messaging like gonna give you some kind of oomph in terms of, gas costs? Is that like a very cheap transaction to make?
Yeah. So basically what we're actually doing is, like with leverage, for example, it's called LZ ping pong or recursive calls. So basically, say you have Ethereum mainnet and you have Arbitrum and you're leveraging up ETH and like that TE strategy. Basically what's happening is we're ping ponging messages back and forth between Ethereum and Arbitrum to execute transactions simultaneously on both chains. And basically those recursive calls then execute whatever the orders of operation is in like a leverage call. It would use one of our swappers to basically, swap up the, loop up the position. So your gas costs are going to be slightly lower. And especially when, Rari was a fork of Compound.
Right.
Compound is an extremely old code base, so it's not extremely gas optimized. And we have a ton of new stuff that's built into Tapioca that most modern protocols use. Like we have permit. I forget the IP, but basically, so you don't have to do an on-chain approval. You can do a gasless signature. and things like that. And all of those things are little touches that move the gas costs down. And the biggest thing is with Bento Box V2. What it did is it removed the S store call, which if you're a developer, you know S store is basically the largest and most gas intensive call you can do because it's data storage, and data storage is the most expensive thing you can do on mainnet, Ethereum mainnet, or anywhere for that matter. So basically, Yieldbox or Bento V2 removes the S store out of tracking users' balances, and it simply uses a share model, which Open Zeppelin just somehow found for ERC 4626. I wonder how, but but yeah, we us and Boring got that we could drop the S store call, and that basically makes these operations as cheap as they will ever possibly get.
Right.
And I guess Open Zeppelin will give them to you too.
Yeah. That's super cool, dude. I've been hogging the mic here. Jedi, do you have any questions you want to?
You know what? It's just been beautiful to see your reaction, dude, because this is the kind of project or protocol or just foundational like essence that DeFi needs. And I know that this is the kind of stuff that you absolutely love. And it's like, I can just see you like do the whole like thing on the wall with, like diagrams and the whole thing, like Circa is that person, like if you look at how somebody approaches the market and the way that he visualizes things, that's him. And it's like, I'm just watching you and it's just like, yeah, this is exactly what Circa loves. This is his baby. And I can see that. And there's a lot of totally, dude. And there's a lot of people out there that think about DeFi in that way. It's not just this one thing. I think the real chads in the space like see the whole thing, and they see that it's not just about ETH. It's not just about LTs. It's about this whole beast that is DeFi, and how does it all come together, and how do you actually maximize your potential from a collateralization perspective, and how do you put it to work? And I think that's what Tapioca does in its essence for me. I'm sure there's a lot of essences there for many people, but for me, it's like I can see the whole kind of like the whole big picture with Tapioca. It's like I can access all those like prime spots where I need to be. And I think what's interesting for me is not what it is now, but what it's going to become and what it could potentially become.
No, I agree with that. And I think one of the big things is like why a year and a half ago, basically, we decided to do this was, we looked at lending and borrowing, which is what I've always been most passionate about because they're more of the most complex protocols, I think, besides like maybe CLOB type stuff and order book style stuff. But nonetheless, there's been a lack of pushing things forward. Like everything's based on Aave compound. You had Euler, which was iterative, but there was really nothing besides Alchemix and Abracadabra that tried to push things like really push the envelope. So we wanted to do that. And the second thing was, like I said, on the token economy side, that like I just think we've spent so much time copying a broken model in liquidity mining, and just how even protocols these days copying VE. Like I don't think VE works well with 99% of protocols. It works well for
100%
Curve,
agree with that.
but like for example, Ribbon has an incredible protocol, and then VE Ribbon, and it's like, is that a good fit for Ribbon? I would say no, and I think most protocols it's a no. I think Balancer made a tragic move going to VBAL. I just think like there's too much like derivativeness and like just copying the same models over and over and not really identifying what would work best for what you're trying to do and making something new. And that's how I think GMX succeeded so well, was they didn't just do, your normal, let's liquidity mine GMX and blah, blah, blah. They set up ESGMX and multiplier points and things like that really complement what the protocol does. And, and I think that's all you have to do. You have to kind of really think about your token economy and your protocol as a cohesive unit that is basically there to complement one another. And when you do that, you create magic, I think. And And I mean, it's just about thinking about like, okay, where's sell pressure come? Okay, where's the buy side pressure come? Where's the inherent value in this? And just actually asking yourself, does a token need to exist for this protocol? And if so, why? Like, and it's just like, I think a lot of protocols don't even know why they have a token. Like, it's just like, yeah, we have a token.
It's a good fundraising mechanism.
Yeah, and that's it. And it's like if the answer is, kind of getting customers in and like stuff like that, like a Blur did maybe, it's like great, but then what? Like now your token's out, it's depreciating because there's no inherent value.
Yeah,
Now
look at
what?
looks. It's at all-time lows.
Yeah, and we've already done this with Looks and X2, Y2. I mean, I think Blur is a better protocol for pro traders, but like it just, I just really think the token side of things, it's just kind of like, oh, here's a token, and it's like, what does it do? I don't know.
Yeah, I couldn't agree with you more in terms of the VE stuff. I remember when I saw Andre rushing to do VE 3.3, and I was like, this is gonna be bad. Because I think the VE like Curve, I think a lot of people misunderstand Curve in that like really the reason that Curve has a place is because of how DeFi works, how when you make a new protocol, chances are you're going to have to peg some synthetic asset to an existing asset. And that's where Curve comes in. So, and that's why all these protocols want, to direct, voting for Curve, is because they need to keep, ALC ETH or whatever, like pegged to ETH. But not because people desperately want to swap on Curve.
Exactly. I've said this tons of times. Curve is not a swap. It's a peg. It's a peg stability.
Peg mechanism. Exactly. Yeah. 100%.
And I've always likened it to like, it's kind of like the mafia. You got to keep your VECRV payments up or you're going to lose your peg. And that's, and that it works. It does work. And it's just like, we're kind of just, trying to go this other route. And I think LPs are really critical to a stable coin because it's like without the LP, you're getting bank run and it's going to zero. So it's like if a DAO owns the LP, okay, now who's going to bank run it? And then everyone that trades it, you're getting the fees from it as a DAO. So it's like win-win-win. But it's easy to say that. Then it's like, well, how do you get the capital for the DAO and everything like that? But that's how I think cool stuff gets thought up, is like, how do you solve these problems?
Yeah, I love it, dude. It's also refreshing to talk to a builder who sort of is interested in this space from this perspective, not wanting to copy things, a fan of all these other protocols and the history of it, and how it's evolved. Like very refreshing to hear your perspective.
Oh yeah, you gotta if you ever see one of my mirror articles, they're like, Jedi will tell you, they're like historical like I was talking like history of stable coins. I'm talking about like BitUSD from BitShares and all this crazy stuff.
Yeah, sometimes I'll go off in the pit about like some obscure DeFi history, and people think I'm crazy.
Yeah, I think it's good. History is always good because it's like if you don't understand the history, you're doomed to repeat it. That old quote, and it's just like I think that's really true. To kind of you have to know what's been done before. And I think identifying problems in pre-existing models is the best way to actually innovate and move things forward, is looking at real problems and like where things lacked and also where things did well. And then kind of working in between those two things. Like our whole TWAML system on locking, it's basically VE, but it's what it does is it dynamically modulates based on how like economic activity within Tapioca. So it's like during the curve war, if like maybe to get 1-to-1 on VECRV when you're locking, what if you had to lock maybe like 10 years to get it? And then now when there's more of a downturn in the market and everything like that, what if you maybe could lock 6 months to get the max benefit? Because the goal is to get as much lockup as you possibly can. And that's where TWAML was built, is just like, how do we get the max lockup we can? And that was kind of the thought process on it, was looking at.
So you mean you're optimizing your lock efficiency
Yep.
to the willingness of market participants.
Yes, exactly. And basically how it works on like a real simplified version is like if I lock tap for a year, 100 tap for a year, I'll get 100 TW tap. And then if Jedi goes to lock the same amount for the same amount of time, he'll only get 50. So
because
then
you're closer to your target.
it's all based on what's called average magnitude lock. So when I do my lock, I push the AML up. And then now when Jedi's going to lock, the AML is higher. So now it's requiring a longer lock time to get the max benefit out. And then basically, if I then abandon my lock and Jedi then abandons my lock, his lock, and then you go to lock, you're now going to get the max benefit at the shortest amount of time, because then the AML decays back down.
So
it's basically,
so the max lock requirement titrates down if you're severely under target, because you want to incentivize more locking to go.
Yep.
That's cool, man.
And there's no max lock time, and the minimum is a week, so it can be anywhere in between the two. It's just what the free market is willing to put up in time and how much they value TW tap as a asset, and how many weeks and things like that they'll put up. Because basically, we always when we were designing this, we were like, time has value, of course. Like it's like one of the lines I used in it was like, it's like, what if I told you I'll give you $1 million or I'll give you 100 grand? Of course you'll take the million, but it's like, what if I told you I'll only give you the million for a millisecond, but I'll give you the 100 grand for 10 years. You'll probably take the 100 grand. Yeah. So it's kind of like we should be weighing this. And then that's how we thought up this whole time weighted average magnitude lock thing, and thought that all up, and then created this TW tap and everything.
So when you guys are in beta right now?
Yep. We're on phase 2, so it'd be 4 phases. Right now we're going into phase 3, which basically we're gonna have like real oracles and everything like that. Hxro Labs is also doing risk auditing for us. They're gonna be deploying a dashboard like they did with Go, and so we'll have kind of all that, and people will actually be able to play with TWAML in the phase 3, like kind of seeing how lock times and stuff like that kind of changes, the reward ratio and everything like that. And then basically phase 4, everything, we'll just have the whole protocol on beta while we're doing our code arena audit. And I mean then mainnet, baby.
When are you guys, is there a date set for launch, Matt?
Not a hard date, but I will say it will be in July, like almost 100%.
And then just before, I mean, we have gone on for quite a bit, but I want to touch on something that's really important, and what makes Tapioca a very unique protocol is obviously the options aspect of it. Can you just explain it in idiot terms, how and why you guys came into the whole options process and how that works?
Yeah, so it's like I was talking about with liquidity mining. We were just like, this doesn't work. Like, how do we change it, and how do we make it sustainable to inflate a token supply, incentivize something real? And one of the first things we did was we said, like, we got to get away from TVL. Like, TVL stands for total value locked, and it's like, well, it's not locked. And is it value? I mean, that's debatable. Depends on how much fees you're able to get off the rented liquidity. But we said, no, we don't want rented liquidity. We want protocol-owned liquidity. And actually, weirdly enough, speaking to Andre Crony, we found O Keeper from like 2021. This call option incentive, and it just never went anywhere. Like, it just kind of seemed like they did it, and then that was it. And kind of the bad thing with it was, O Keeper, when you would exercise it, all of the redemptions would go out to VE Keeper lockers. So like all the liquidity you're capturing is getting put right out of the system. So we were like, this doesn't really work. And then like we were thinking, okay, well, what should the discount be? Should it be 50%? Should it be 10%? Should the DAO set it? And then that's when we created TWAML to modulate the discount levels based on the economic activity. So if we have a lot of lockers, we don't have to give you a 50% discount. But if we have few lockers, then we'll give you the 50% discount because we need more liquidity in for lenders, for borrowers rather. But basically, a call option, simple terms, It is a right, but not the obligation to buy an underlying asset at a fixed price in a fixed amount of time. So, like if I give you a call option on ETH for $1,000 in the next week, that means regardless if ETH goes up to $5,000 or goes down to 800, you can buy it for $1,000 this week at any time, and that's an American style call option. So basically, OTAP is an American style call option, and what it does is, as a lender, you mint some USDO with the gas token or liquid staking derivative. You lend it in a market of your choice. Could be against GLP, could be against Try Crypto, whatever you want. You lock it, so you're gaining yields from borrowers. And then when you lock it, for every week you're locked, you get OTAP. And basically, if you get a 50% discount, that means you're making a 50% profit every single week. And it's basically that simple, as long as TAP doesn't depreciate and all that type of stuff. Because again, it's a fixed price, and that's how it sets a price floor. Is if like I put a bunch of call options out on ETH at $1,000, what's the lowest price ETH is going to go to? $1,000. So it sets a soft price floor there. And so it basically seemed a great way to set a way to inflate and incentivize escrowing of USDO and creation of USDO while being a sustainable inflationary mechanism throughout the whole time. And then we chose to have a fixed cap of 100 million taps, so there'll never be more. And we set an exponential decay curve. So, basically at the start of Tapioca, you'll get the most OTAP, and then that'll keep decaying every week until it goes to 0. And that's that. And it's all dependent on how much OTAP is redeemed each week. So if like 50% is redeemed, that extends the DSO out longer and longer and longer. If there's 100%, then it just stays against the curve. And we have graphs of that on our docs of like how long it can go based on different redemptions. But basically, once 100 million tap is issued, there's no more incentives, and the DAO will own a ton of liquidity. And that's basically a successful capital bootstrapping with the token. And then basically the token becomes a fixed supply where you get supply shock, price goes up, which is, the intended effect, of course, when you're done inflating. And then, all that pull that we now have, it would be used to basically lend that pull out, maybe get into RWAs and things like that, and balance sheet lending, and then bring those yields to TW tap lockers. So it basically turns Tapioca into an inflationary type of economic environment, into almost like a central bank that's putting out where TW taps almost like almost like a T-bill, and yeah, and that's kind of the whole economic model of Tapioca.
That's fire.
Yeah, no, we put a lot of damn work into it. So I'm really proud of it. I think overall it's like some people say it's an experiment. It definitely is an experiment, but I think we've done enough modeling on it where we have a great idea of where it can go. We know where things basically the only way it can fail is stagnation, where like people just go, I don't want this, which it would be very bizarre, because I think call options are probably one of the most inherently valuable assets you can get, in the money call options anyway, because there's inherent profit. Like, liquidity mining, you can get free tokens, but what if the tokens are worthless? So it's more of a really strong incentive for people to get involved. So
yeah, that rocks. Well, what is the tap token now available or no?
No. So we're basically tokens coming out with the protocol, and we'll be doing an LBP, like a liquidity bootstrapping pool, like a balancer style pool. It's going to start at 352, which is 4x basically quote unquote fair value, which we set at 2x our seed valuation, which was 44 mil. And basically, and then people can contribute to the LVP. And then one of the really cool things that I think a lot of people are going to copy is our call option airdrop. We're using calls and OTAP as the airdrop mechanism instead of free tokens. So don't have to worry about Sybils, nothing like that, because Sybil it away. We'll take your liquidity all day long. Your money is good as anyone else. So no Gnosis style, like, hey, tattletale on your neighbor, Sibler. Sybil away, friends. It's all good. Your money's green like everyone else's. So.
Oh, we can't hear you, Jedi, for some reason.
The NFTs that you guys minted, Matt, they obviously have a call option on them as well. Certain number of tap tokens attributed to the NFTs that you guys minted. Yeah.
So the Pearl Club NFTs, which are dope, Mo made them, who created the Kanto long necks. They will each get 713 OTAP at a 50% discount. So
nice.
Basically right now, if you did the math, because the floor on them is about 1 ETH, that value is tapped at about $5 or so. Obviously I'm not giving any financial advice. I'm just saying what the math is on it. But yeah, that's kind of a cool way to get involved, is the Pearl Club NFTs. There's not a lot listed. There's only about 4% listed. People are hoarding them. But they're really exciting. I think they're a really dope collection, and we're doing some cool stuff with them as well.
I've bought quite a few of them.
Are they 721s or 1155s?
721. And they're OmniChain NFTs, so you can have them on any chain.
That's fire.
And the background changes as well. The art actually changes depending on what chain you're on.
Gasless mint as well.
Yeah, which was dope. But yeah, no, like I have mine on Ethereum right now with a purple background. If you put them on ARB, they'll have a blue background, so they like change depending on what chain you're on.
It's amazing.
Yeah. Right now our only problem is OpenSea is just being a nuisance to us, but the community is very happy. They got awesome NFTs. They're doing great. A lot of volume, a lot of attention on them. So I'm really happy with it. Just OpenSea, no longer a fan.
Yeah, it's easy to not be a fan.
Yeah, no, it really is. Let me tell you, but all good. I mean, I think they're and basically we gave them out for free to people who left feedback on our beta, which was a lot of fun. There was some really good people left, like multi-page like reports on like what they would change and stuff like that. And I actually sat there. I read probably 2,000 of those, and overall probably more than that. But I actually sat there and read them for like a week, and it was just really cool to see all the people that actually care. I mean, I'm definitely a person that I remember, there's a lot of protocols out there where they're sitting there making sock puppets to talk to himself, and I'm just happy there's all these people that care about what we're building, and it's really humbling, and it's really cool. It's a really cool experience.
Hell yeah. Well, I can't wait to become a community member and bag holder.
Should we call it? Are we calling it?
Yeah, I think so, sir.
Yeah.
Well, just to say too, I'm a big fan of what you guys are doing, and Jedi's mentioned you guys all the time. He's always got his hero hat on. He's looking fresh in his hero hat. And no, I really like what you guys are doing. It's cool. It's cool to see there's still protocols being built on Solana, because I think Solana's got a lot of upside on Throughput, that you can do some really, like when we were talking about ETH gas costs and stuff, it's like Solana, you're paying like nothing. You can, do a bazillion transactions a second. So there's some really cool stuff doing there. Yeah.
Well, thanks so much for coming on, Matt. We really appreciate it. And I think we're all now very excited about your protocol.
Well, thank you. And I apologize to everyone about my phone rugging everybody.
No, all good. We made it, sir. For those of you guys watching, definitely stay tuned and check out what Tapioca is doing. Very exciting, and probably a very useful tool in the coming year. And if you're not a part of the pit, where we do this type of talk and speculation all week long, definitely join hxro.com, click the community tab, join up, and shitpost with me. We hope to have you back on in the future, Matt, when we get closer to getting out of beta there, and
That would be dope. That would be dope. I would love to. I would love to. Always enjoy, Jedi and all you guys. It's always a pleasure to talk to like-minded people, like you said actually as well. And yeah, no, I gotta actually jump in your guys' Discord and everything.
Do it, dude. Do it. Lots of keks.
Oh, that's
Lots of
always the way
keks.
to go.
Yeah.
Dude, the
rock
place
and
is a
roll.
freaking mosh pit, is what it is.
Yeah.
Well, that's it. That sounds like a community I want to be a part of. So
Yeah,
I'll have
dude,
to
it's
join up. You'll
fucking
be
awesome.
seeing me around.
Awesome. Well, we'll see the rest of y'all next week on the pit. Thank you so much for joining us.
Like and subscribe. Like
Everybody,
and subscribe.
much love. Much love.
Cheers.